Thank you. Oh, God.
All
Okay.
right. Also, there's more members here. It should be.
Yeah. Why?
There's 12 people here.
It says that Reggie von Meers has two accounts linked here.
And who's this person with the phone number?
I've no idea, actually. Because looking at the group that we have, there's how many? There's
There should be 10 of us in total.
Yeah, 10 of us in total.
Okay, so Dash says that's
On the
him or
phone.
her. Who's Jake?
I don't know. Let me see. Anyone?
We should have Troy. We should have Juan. We should have Reggie. We should have Koto.
Yeah.
We should have Juan.
Who's JC?
Who's JC, guys? Okay, that's FX Don. And who's Jake? Who's Jake, guys?
Yeah, Jake, just message in the group on Telegram.
Jake, I'm giving you 5 seconds, then I'm blocking you. Okay, your 5 seconds is up, Jake. Jake is not in the group.
Okay, should I remove him now?
Yes, remove Jake.
Okay. Okay, I think we're all set. Okay, yeah, we're all set and we're recording. Okay, perfect. Okay, so I'll kind of go through that once more because I forgot to record. Okay, so Euro USD, right? So we'll be looking at peak formation trades and level 1 safety trades. Okay, that's the only trades that usually me and GP trade. Now with Euro USD, we'll be looking here. Basically, what you see is you're going to see for a proper peak formation, you want to see 2 days of consolidation, right? As you can see, my charts here, these dotted lines, those are divided right after New York session, the dotted line, and then we go into the next day. That's 1 day. So this right here counts 1 day, 2 days. The pattern for level 3, if you saw my notes, hopefully you guys studied them, you're going to see either a half Batman pattern, 3 hits to the high, 3 hits to the low, multi-day M or W formation. You're going to see some candlestick patterns up there, pin bars, railroad tracks, aggressive behavior at level 3. That's the dealer, getting ready for the next cycle. So they have to create all the damage. You have to get buyers, sellers, trap all the traders, right? That's the concept of level 3, okay? And this level 3 is not valid until the ADR is hit. I believe in the ADR. I'm not trading, like, for example, some of the I think GBP USD, it didn't reach the ADR, therefore I didn't trade it, right? That's just my preference, right? If I see that it's in level 3, or I see that it's making an early level 3 and it doesn't reach the ADR, I'll stay away from it. It's just how I trade. So with Euro USD, it was at the ADR. I think it extended. So let me see here. As you can see, the ADR is 172 right here, right? That's why we have this indicator. If you don't have the indicator, I will send it in this group so you guys can download it. From peak to peak, it was 272, right? So we had an extended ADR. Okay, so we had extended ADR, I think a little bit over one extended ADR. Then we had this pattern, therefore it was locked in. So now I'm going to show you, once we have this locked in, how do we know that the peak formation is locked in? How do we know that, okay, this is valid, and now we're looking for level one? Well, number one, with level one, you see that the 13 EMA and the 50 EMA, once they cross over, that's level one. Okay, so that's level one. That's indication of level one. And number one is, okay, so what is the ADR? What is the 1 day ADR value? Right, it's 57. You see my mouse pointing right here. It's 57. So if in 1 day, if the pair from the peak formation, if it exceeds the ADR 1x in 1 day, that means it's locked in. So in 1 day, from the top of here, how much did this pair drop in 1 day? Right?
Yeah.
Is everyone muted or? No, wait. Someone say something. Can you guys talk as well? Are you guys muted? I don't know.
Koto, do you have something to say? Koto.
Okay.
No, I'm cool.
Okay, can you please mute your thing, unless if you have something to say?
Yeah, if you guys want to participate and talk to me, I'll be asking you guys questions. If not, just mute your mic. But if you want to talk, feel free. You'll get more out of this webinar if you actually talk and ask me questions. That's why we're doing this live, right? So you saw it was 90 pips. The ADR is 57 for the day. That means it's locked in. Plus, we had a crossover of the 13 and the 50, indication that it's locked in level one, and this was level three. So then what we start doing is, what I do is I take ADR 57 and I create boxes, right, for 1 day of the ADR. This is why you see these boxes. Each of these boxes represents 57 pips. So I stack the boxes like this, and I put a line here for 3 times ADR, just so I can see where we're looking at once it reaches the ADR. This indicator will tell you if the ADR is reached. It says no here because we're on a new cycle, right? Because it was already reached. We're on a bullish cycle. So with that being said, and when it's locked in, what you most likely will see is that at each of these boxes, right, at each of the ADRs, the price will consolidate at each ADR for the day and create the levels there. Right. So in this case, the price started consolidating more at the 2 times ADR, right? So let me just box this. This is level 1 of consolidation. There's our M, A, and then we have our W here. This is extended ADR. So this right here would be your level 2, because we had. Okay, because we had the 50 and the 200. Okay, sorry, I was just reading the group chat. We have the 50 and the 200 crossover. This indicates that it's level 2 of consolidation. Right now, you might be thinking, okay, so look, ADR went 3 times. You're expecting a level 3. Well, no. Visually, we only have level 1 and level 2, and I believe in the EMAs as well. EMAs are powerful. Don't overlook them as well. Right? So the pin here tapped 3 times ADR, but in reality, look at the EMAs just crossed over right now, and plus we had a multi-session M formation here pinning the EMAs, right? And also the TDI still doesn't look like it's ready. So I was expecting, right, an extended ADR, so I drew off 1 more box for the ADR level, and this marked right here is a 1 extended ADR. Now notice how then price reacts perfectly like it's a support level to the ADR right here, right? It comes down here. EMAs are already fanned out. That's another characteristic that we're in level 3, right? It's hitting the ADR, it's hitting the ADR, it's hitting the ADR. We come here and we stop hunt one more time to grab all the traders to, there was a pivot point. So these pivot points are updated daily. So this is for, obviously for today, Friday. There's a pivot point here. Right now, look at the TDI. It comes here, does a shark fin, and comes back up. You could say right here was the peak as we came right beneath the one extended ADR. Then we had the moving averages cross over. And that was the end for Euro USD. And you can expect a bullish cycle. So basically, and I'll show you how well, if we go on a different pair, like for example, the reason why I was still going long on Euro JPY, I just got out of it just because, you know, it was a little bit of consolidation. You know, I was expecting it to move the next day, which it kind of did move later on in that day. But it's whatever, you know, it's, I didn't lose anything on this trade. I broke even. Okay, let me look at Euro JPY. From here, obviously this is level 3. Why? Because level 3 usually takes the longest to form. Level 3 here, 5 days. 5 days for level 3. Once it started dropping, you understand that this is level 3, right? Then you identify it, and look how I drew the ADR box right here, and notice how price consolidates right at the end of this ADR box. You can expect level 1 to start consolidating right at the end of this ADR box. Sorry. Okay, so we had the consolidation right here, and then, I mean, what do you see here is you see this beautiful 2 pins right here, tweezer top pins, right to the 50 and 200 EMA on the 1 hour. Notice I'm always on the 1 hour chart. So you saw this, boom, and you saw it drop right here, dropped right through the second box that I drew as the ADR. Now I draw those boxes because, well, I want to see visually where the ADR is. I don't want to just, you know, do ADR from here to here, draw a line here. I like to see the boxes just because it helps me identify where they will consolidate for the levels. In this case, it consolidated here. Then it dropped right through the prices. Notice how the EMAs cross right here, indicating level 2. And then right here was our 1x, was our ADR was reached right here. So ADR is off. Now that ADR is off, now I'm interested in the pair for a reversal, because once it reaches the ADR, now I'm looking, okay, now I want to see level 3 behavior, right? So we came here, but we didn't reach at this W formation, we didn't reach the 1x ADR, which I have marked off here, and indicating that we came here, we had a W formation. TDI shows that it's already valid to go and start the bullish cycle, but then we came up here and we had a nice M formation off of the 50, indicating that we'll most likely come back and retest the lows here for you know, how Steve says, a big fat, you know, W formation, or a big fat M. Those are the terms that he used, right? In this case, it's a big fat, right, W formation. So, and what was I expecting? Well, it literally came exactly to the 1x ADR extended line. Look at that, it came there exactly, and look at TDI. TDI at the extreme gave us the W formation. Now you got the dealer. Now you can expect them to continue the upward cycle. Now in this case, in 1 day, right, as you can see, did they reach the ADR in 1 day? If anyone wants to answer. right? Well, okay, no one wants to answer. Okay, they did. Yeah, locked in means confirmation. I don't have the group chat up on here just because it gets in the way of this chart. So if you want to ask a question, I recommend you actually speak up because it makes everything easier, okay? Yes, they did. From this to here, that's why I have this box marked up. They reached the ADR 1x in one day, meaning they already locked in the peak. This right here, if you think this is level 1, this is level 1 for me based off of the EMAs. I'll show you. Right here, this whole level is level 1 to me, right? Not just this level 1, level 2, level 3. This whole thing is level 1 because the EMAs crossed over right here and they're still crossed over. This is all level 1 that I'm expecting the V1, right? WV is right here. It's not here, it's right here. And look at the TDI. Entry for level 1 is right here. Right, it was locked in because we moved the 1x ADR in one day. And look at this, head and shoulders. Look, one there, one there, one there. Head and shoulders pattern. That's another thing that's seen in level 3, head and shoulders pattern. 3 hits to the low, half a Batman or a reverse half a Batman, whatever you want to call that, if it's still the same, right? Or inverse head and shoulders. Now, why I went long on EJ? Well, look at the EMAs crossing over, 50 and 200. Okay, this is my level 2. That's why I'm still expecting, that's why I was expecting EJ to be bullish, right? Level 2, right? They came here, they hit 3 hits to the high here, probably faking out traders that this is the real peak. Boom, came down here, stop hunt low, retest the EMAs, look at the TDI, comes here, gives us a shark fin. On the 15-minute time frame was a nice stop hunt and W formation, and we continue to the upside. Now look at this actually. So look at the consolidation here and look at the consolidation right here. This is our 2x ADR right here. Can you see that level 2 was consolidating exactly at the box? Can you see that? Isn't that crazy? They consolidate level 2 exactly at the 2x ADR. That's why you draw your ADR boxes. It's very powerful. Now I'm expecting price to continue up here to reach the pair's 3x ADR, which is 228. That's why I draw this off here.
Wait, does the new ADR happen when the level 1 is broken?
I don't really understand that. What do you mean when it's broken?
Like when the new level 1 hits, like the 1x ADR doesn't restart at level 1?
No. You count your ADR from the peak to peak. So you count it here, and then you have your ADR reaches right here. You don't restart any ADR. This is the 228 up here. From here to here, 228. Each box is only 76 pips. Can you see the mouse right there? 76. You can take 228, take a calculator, divide it by 3 if you don't have this indicator. Divided by 3, each box is 76 pips. Okay? For example, I have a chart here. The peso. This is a safety trade that happened on Thursday. From here to here, I can draw out, okay, so the ADR value is 1962, right? Clearly, you can see what type of pattern is this right here. And we have how many days of consolidation? If someone wants to answer.
Is it a triple bottom?
So look at this spike here, like half a Batman, right? Boom, spike here, come here, and they don't break it. See, it's kind of like a reverse half a Batman, right? And the ADR was reached, of course. It was actually, I think it was extended by 1. It was extended by 2x ADR. The pair was ready. It was 100% ready for a reversal, right? Believe in ADR. Make ADR your friend. It's your new best friend in trading. If you haven't used it, it's your new best friend. Okay, well, 1962. Let's take it from the peak here. Box. Okay. 1967, close enough. Take it, hold control if you're on Windows, copy it. First thing you want to do when you look at the charts, draw out your ADR. Nothing else. Find the peak and draw your ADR. Right? You see that? You see how level 3 came right to 3x ADR and did their, you know, kind of like a shoulder, head, shoulder. Well, not this high breached it, but we had our 2 days of consolidation. Right? For a proper peak, you want to see 2 days of consolidation. 2 days here, 1 day and 2 days. Half a Batman, multi-session, M formation. Now you want to see something even crazier? Well, look at this. Here, basically what we saw here is that we had a consolidation and right at the 2x ADR box, they hit it and they stopped and they consolidated and they went back down here for a stop hunt. Right, how do I see this? This is how I see this. That's my level 1. My level 2 is right there because the EMA is crossed over right here. I believe in the EMAs as well. Level 1 for me and level 2. Then the next 2 days they came here and they went up, extended the ADR a little bit. It's not a 1x ADR, but they're just working around the ADR so they can trap all the traders. Also, if you saw in my notes, you guys read the notes in the TDI, you know the market baseline, right? Right, on the come on guys. I'm trying to make this as good as possible for you guys, but you guys have to participate, not just watch. Otherwise, you could have just paid for a recorded webinar. This is live for a reason. Come on.
Market baseline is overbought, so we sped that reversal over there.
Yeah, right. Market baseline is the yellow line on the TDI. Okay. Another confirmation that everything is good. Look right here. Right before, market baseline doesn't lie. It's actually one of the best indicators to spot a reversal. Even Steve said this. I'm assuming everyone here has seen his videos, right? Look, market baseline is already at the extreme level. Okay, confirmed. Great. Now we have all the other indications that I just told you. Right here, level 3. Everything that I just told you. Level 1, level 2, 3x ADR, 2 days of consolidation. Came here, you could have entered in here. Stop hunt, right? Came here, gave us a shark fin to the 50. As I say, to the market baseline. Market baseline right here, look. Boom, to the extreme level. You know that, okay, great. TDI is ready. TDI shows that it's level 3. 2 days of consolidation. Reached its ADR, candlestick patterns, aggressive behavior, came here, stop hunt, grab all the orders, all the people that went up here, induce people to take trades to the upside, buy, right? Take their big fat hand with a spread, come up even higher. And there's so many traders trapped here going long. All the and they're not coming back.
How do you tell when it's breaking out of the consolidation to go to the stop hunt?
So So you're talking about getting entries on level 1 or 2?
Yeah.
So for that, I mean, you use your knowledge of understanding the stop hunts, the inducements, right? So if we take a look at the 15-minute time frame, if you're trying to enter, for example, right here, right? Look at this Asian session. This is one of the smallest Asian sessions I've ever seen in my life. Look at this thing, especially on MXN. God damn. Anyways, right here, TDI went to the extreme, and we just had one bullish candle. Look at the TDI. That's a good entry to go in. We had the price consolidating here. Why? Because it's at the 2x ADR box, so I'm expecting a consolidation. Then you expect a stop hunt low and rise, which is the V, right? WVVM. So you're expecting this, and they work this area for about a day and a half, right? And they give you another opportunity to enter. If you didn't enter here, Asian session, boom, pin here, one more time, boom, pin here, another pin here. Look at the TDI, hits the volatility band there once, twice, and you go to the upside.
I have a
So,
question.
yes.
On March 25, it looks like we had a W pattern on the blueberry. How do you filter those signs of bullish? But as you can see, it dropped a little level more and then they go up. So how do you expect that they might drop a little bit more?
Well,
25?
yeah, so basically, I mean, they could drop a little more, but the reason why you enter in is you enter in on a proper stop hunt. You're not just gonna enter in on, say, like one candle. You don't just enter in here. You want to make sure that everything is confirmed. Number one, on the 1 hour time frame, you know what to expect. Is you're still expecting them.
Yeah, I mean on the 15 minutes. Can you put the 15 minutes again, please? Okay, on 25 of March. Yes, over there. It looks like we have a W pattern and the second leg on the New York opening session, I think, and then it dropped to the downstairs. Yeah, right before it looks like we have our W pattern for continue the upper trend. So how do I know that it wasn't the perfect W over there, because it was on the low of the day in that moment, and it drops a little bit more? Do I explain myself?
So, looking at this right now, at what time this occurred,
Just before that, we had a W pattern on the blueberry.
right here.
Yeah.
Well, for me, I don't even know if I would have entered on that one right there. I would have probably been looking at the 1 hour chart, because I look for confirmations on 1 hour and 15-minute for entries. I don't just take entries blindly off of the 15-minute. I always look at the 1 hour chart.
Hi, Nick.
Okay.
Nick.
Yeah.
Nick.
Yes.
I'll explain to Juan when I do it. I understand what he's talking about and how he got trapped or would have gotten trapped in that. So I'll explain that. You must just remind me. I'll explain it.
Okay. Okay, yeah. And then if they want to learn about like resets a little bit, I guess you can explain that. You're a little bit better at the resets. So,
All right.
you know, I'll just give them the basics here, right? So, okay, so, you know, you understand all that, right? You have your characteristics of level 3. And then what we see here is, okay, so looking at from right here to here, right, in one day, where was it? From this pin to here. In one day, we more than reached 1x ADR, locking in that level, right? So when you're doing this and when you're looking for the lock, what you're doing is you're looking for a safety trade. If you miss this, then you're looking to enter into the cycle on a safety trade. That's why you do that. But also, if you want, so okay, let's take the boxes, right? Normally, 1962. Okay, 1961. Okay, so you draw this out. Oops, come here. Jesus, come on. Okay, always draw out your boxes. Look at that. You see how, boom, right here, they consolidated. Look at that. Look how powerful that is. Boom. Like it's a support, invisible support and resistance. I don't see any support and resistance here. Well, I don't see any I don't use support and resistance. ADR will be your better support and resistance. Look at that. They respect that. And then once they come here, boom, consolidation, and you look for a proper entry for a safety trade. Anyways, let me finish this here. One more box. So for me, I only draw my lines at 3x, and then if there is no clear reason for a reversal, which is all the characteristics I just told you about level 3, then I simply do it one more time, right? Because not always, actually most of the time you will see a 1x extended ADR. Most of the time you will see an extended ADR. If at the ADR, if they come down here, spike and work the area, or if they tap it perfectly, or they could extend it 2 times, even one more time, right? All depends on the money, right? It's all about money. If they don't have enough orders, they're not going to reverse for you. Okay, so anyways, also I will cover some pivot points as well. Now for today's pivot points, I would have to go on the 15-minute time frame just to explain that a little bit. But you saw the pivot points, M4 to M2, M1 to M3, M5 to M3. Basically, pivot points comes in 2s, right? So if you're looking at, if you see a stop hunt at the M4 pivot, then you're looking to take your intraday profits at the M2 pivot, right? M4, M2, M1, M3, M5, M3, M4, M2, right? You understand that concept. It's not too hard to understand. Okay, had here consolidation, boom, safety trade, and we drop. I'm expecting MXN next week. Possibly do a little stop hunt, consolidate, or just do a straight drop to our 3x ADR. And then once it's at 3x ADR, then you're interested in the pair and you're looking for level 3 behavior and entries to go back to the upside. But until then, MXN stays bullish. So what else? That's kind of me analyzing the chart for you here. Also note that we had the crossover of the EMAs right here, giving us the level 1 indication. Now, when the EMAs crossed right here, that means that price was right here. So then it came down here and it started as level 1, right? So if it crossed there, this whole area for me, come on, behave properly. Let me draw a box, come on. Okay, is level 1 for me. So what else is there to show you guys? Euro CAD, same concept. So coming from this peak formation right here, what we saw here was, okay, look at the, okay, well, first of all, if you're looking back at the chart, this was indeed the peak formation, just because of everything, the ADR, all those things was reached, right? So this was a proper peak formation. Now, looking at this cycle here, what we did see is, okay, number one, can you see here that what do we get? From here to here in one day, they went beyond the 1x ADR because it's 82, right? It's 82 and they went beyond it one times in one day. So you're like, okay, cool. It's you know, it's locked in because they went beyond it and the moving averages crossed over, the 13 and the 50, right? Confluences. Came back up here for a safety trade. Beautiful safety trade. Look at that. Right to the stop hunt box. Star pattern. Evening, I think it's an evening star or a morning star. I don't know which one is bearish or bullish. I forgot. I don't know.
I have a question real quick.
Yeah.
So those white boxes are stop hunt boxes?
Yep. Stop hunt boxes.
Okay, so you would look to enter on those, right?
Yeah. So you see right here, there's a stop hunt right there. It went a little bit beyond the stop hunt boxes are 25 to 50 pips above or below Asian session. Usually, that's you know, that's kind of what you that's the number one thing that that you look, not number one thing that you look for entries, but you're looking for just the characteristics of the stop hunt. You know, you have the pattern, the M&W pattern, core to wood pattern. You know, you have the TDI giving you the indication, candlestick patterns, obviously happening during the 2:45 a.m. My time, Central Standard Time, and then for New York, it's going to be about 8:45. Or no, 9:45 my time in the morning for the New York stop hunt. So you're basically looking for the entries during London session, right? Look at this inducement right here. 1, 2, 3 vector candles came right here to the stop hunt box. It gave us the TDI. Very basic stuff to enter on the 15-minute. This is the easier stuff. I'm trying to go over more of being a little bit of a swing trader and just trading safer trades, right? Being able to trade the safety ones. Let me go back to Euro CAD. H1. Okay. This chart smaller. Whoops. Okay.
Okay, I have a question quickly.
Yeah.
So if you're only looking for like 20 pips per move, right? You would wait for the Asian session, see where the London session tops, and then enter off that, right?
So always trading in line with the trend though, right? So like for example, if you're looking right here and you see that after this Asian session, they went to the low a little bit here, I wouldn't take this trade because it's counter trend. You would have made some pips there, but it's counter trend trading. DNC, right? Do not counter. A better trade would be wait for them to hit the stop hunt box to the high because you're in level 2 still. And you're expecting them to complete the cycle. So you're only taking stop hunts in the direction of the trend, and that's what I'm teaching right now. Stop hunts are easy to catch. It's not rocket science, but make sure that you're in the direction of the trend to read the reversals, bearish cycle, bullish cycle. You can trade peak to peak, safety trade to safety trade. It's less stressful for you too, because you know what they're doing. If they put you a little bit drawdown, right? Like say for example, you're entering right here to go for a buy because you see everything. You know that they have a limited amount of equity. So if you can handle the drawdown, then you're fine because you know that they're just going to come down a little bit lower and pull back because they have a limited amount of equity. I'm trying to teach you how to understand and read the dealer. Anyways, we had level 1, we had level 2, and then we had a drop here. Still haven't reached our 3x ADR. So at this point, if I'm right here in the day, I'm not interested yet in this pair because the ADR hasn't been reached. Boom, it's been reached right here. I'm interested in the pair. Came down, induced right below 3x ADR. Look at the TDI. Market baseline is at the extreme levels already. H4 shark fin. If you want a better confirmation that it's a peak formation, go to your H4 chart. This is freaking powerful. Go to your H4 chart. If you see that TDI shows you a shark fin on the H4 chart, you're good. Right here, shark fin, H4, you're good. Shark fin, M formation at the volatility, at the extreme, you're good. When you see shark fins on H4, powerful. Let me see on MXN, H4.
So is the TDI, sorry, is the TDI kind of like a RSI, like a overbought, oversold thing?
Yes, it's a more advanced RSI.
Okay.
Look, peak formation, TDI, shark fin. Peak formation, TDI, shark fin. Peak formation, shark fin, or M formation at the extreme level. You could trade just based off of the freaking TDI on H4. No joke. If you've seen Steve videos, he tells you that as a joke. He's like, take a demo account and trade blindly just using TDI. It actually works, to be honest. But I'm not trying to promote that, of course. Okay. Let me go back to Euro CAD quickly here. Yeah, Euro CAD. So coming back, H4, then we had our 1 day and 2 days of consolidation. H4 had a shark fin. And you're looking for the reversal. You enter in based off of your knowledge of stop hunts and candlestick patterns. Also look at this, came here, gave us sort of like a head and shoulders pattern on the TDI, came here and rejected off of the market baseline perfectly and continued. Actually, if you look at EJ, that was actually one of the things I was looking at on EJ is on the 15-minute, they were actually right here, right? This was where I bought yesterday, right? TDI off the volatility band. They came here and they rejected off of the market baseline and continued up. That was kind of one of the reasons why I was like, you know, this is actually a pretty good trade to go along right here. Anyways, so that's that. What else is there? For some reason, Euro NZD is not loading my ADR values. I'm not sure why. It's like lagging or something. We'll get some GBP pairs right here. Wasn't too much of a big fan of GBP pairs this week, just because the Euro pairs and a few other pairs had some just better better cycles to follow. But same thing, you know, starting from this peak here, you know, we basically follow the same thing. EMA's crossover. This is your level 1. Then we came here as the level 2, but this was 2 days of consolidation. And for me, I was looking to enter in still long on GJ, but it never really gave us that opportunity. So we'll see. As long as they don't break this low right here, I'm still, for me, I'm still bullish on GJ, but we'll have to see going into next week what to expect. So, understanding those basic concepts, basically it's the same thing, right? From understanding the level 3 peak formation, and then you draw your ADR boxes and you figure out the levels using ADR, using your EMA crosses, and then looking for the characteristics in level 3. Also, rejections off of the EMAs, especially the blueberry on H4, is very powerful. I think right now on NZD, CAD, it's happening right now. Yeah. Actually is a good trade to enter in long right now. I think, I already entered in long. I just didn't want to send it out as a signal because it was like 12 o'clock my time. And plus it's market's closing. But like NZD CAD is good. Price came and tapped right here to our 1x ADR, extended ADR. Came up here, gave us an M formation, consolidates here, and then boom, comes here to retest the M1 pivot. M1 pivot. So basically, if price rejects off of the M4, intraday, you're looking for M2, right? Boom, went to M2. If it rejects here, M1, intraday, you look to take profits M3, intraday only. So maybe GP can tell you a little bit more about pivots. Pivots are not too important. They're just good for calculating the exact amount of pips that they're going to go for the day, approximately where they're going to reject, and things on that end. So NZD CAD, for me, right here, this right here is level 2, just because of the EMAs.
I need a question for you. Can you hear me okay?
Yep, I can hear you.
Okay, good. You said the across of what two EMAs indicates a trend, change in trend?
Say that one more time.
You mentioned earlier that, I just didn't catch the number, you were breaking up. You mentioned that the cross of two EMAs indicates a change in trend. I think you said 13 and 50. Is that right or no?
Yeah, look at the Telegram group chat. Can you see what I posted?
No.
Let me pin it right now.
Okay.
You see it?
Yeah, going back and call. Pardon me, sorry for the delay.
GP, are you there?
Yeah, I'm here.
Okay. What do you? I know you hate this pair because it has a low ADR. What do you think about this? I entered long in at the pin there.
It's gonna go to M3.
Yeah.
Yeah, it's gonna go to M3. You've got like a multi-week W there, and
Yeah.
it's working low. Might come back test the low on Monday, but it's gonna rise now.
Yeah. Yeah, that's a solid. Probably look for send a signal on Monday to go long if it gives us a nice stop hunt to go up. Probably try to hold it for the rest of the week, right off of the blueberry. Do you see the message on Telegram?
No, I'm sorry, Nick, I didn't see that. If you could just clarify it for me, though. You said 13 cross of the 50 indicates a changing trend. Is that right?
It indicates level 1.
Okay. So that
50 and 200, level 2. This is on the 1 hour chart.
Sure.
Yeah.
13 and 50, and then 50 and 200.
Yes, exactly.
Thank you.
Okay.
You know, you've also got a good number of white and yellow lines on your chart. But what do those indicate?
Say that one more time. The mic was a little bit.
Okay, you've got a good number of white and yellow horizontal levels or lines on your chart.
Yeah.
They represent or indicate?
So basically,
Yo, Nick,
yeah.
let me cover that because we now an hour into it, and what I have to say is
Here, let me make you the host now and give you the spotlight. I guess my hour is done.
okay. Yeah, make me the host.
Okay. I think it'll still keep recording, right? If I make you the host.
Yeah, it will continue recording.
Okay. Okay, let me stop my share.
Okay, guys, basically what Nick has been telling you is basically how I also analyze the market, but my main goal is to see this market structure where you've got your agent box, which has to be less than 50 pips or 50 pips or less. Then you should have your stop hunt or your induction. Could just be like that, a half Batman, or it could be an M, or it could be a triple M, or a head and shoulders. And that's when the trend will start. So basically the move from after the dealer collects contracts from the high, moving to the low, and then he'll end off his day somewhere around the low and chop to come back up for the next day. So that's basically the gist of it. You know, here they are right there. It's visible on intraday, it's visible in a weekly. So obviously on weekly, it means you need to be more patient. And the move, more often than not, occurs in the London trapping session. And it also depends on the pairs that you trade. So if you're trading GBP USD, you should expect more volatility or movement of the pair during the London session as opposed to the Asian session or the US session. So giving a typical example of what I just showed on the what you call that PDF. All right. So remember I said you need to have your Asian session needs to be 50 pips or less. So that indicates that it's 39.4 pips. So it ticks the box that it's less than 50 pips. Then you have a stop hunt, which is between 25 to 50 pips. Someone asked what these boxes are. So basically these boxes are your stop hunt areas. It starts 25 pips away from the corner of this box, and it ends 50 pips away from the corner of this box. So if you see setups occur either on it or within it or just at the edge, then you should be expecting some sort of reversal at this point. And as we can see here, we've got some sort of quasi star pattern, morning star, meaning we're going to go long. And this is our confirmation that the trade is valid, that it will go long. And that is our confirmation of level 2 intraday when the 50 and the 200 cross. So remember Nick mentioned the ADR values, and right here it indicates that the ADR is 118 pips. So we look from the very low here all the way to the high. It even exceeded the ADR, guys. It was 143 pips on that day. So if you caught the move from the low to here, you got a little over 130 pips. You obviously need to take into consideration your spread, your point of entry. So timing is also very important, guys. That's why you need to be able to, if you're not in like our area of the world where when the markets are running, it's actually daytime. Fortunately for the US guys, you have to be awake during nighttime to trade this. And as Nick had mentioned, that we look for shark fins on the TDI. So basically the TDI is an indicator that gives market sentiment, it gives volatility, and it gives, hold on, I jotted it down for you guys. And momentum. So basically when you see a shark fin and it's correlating with what you've been seeing in terms of you expecting a rise, then that's definite confluence. So basically how I do this is I look on the H1 and the H4. And once I identify the peak formation, and usually the peak formations that I stick with are from 5 candle formations. And that is a railroad track, the 2 star patterns, morning and evening star pattern, and the 2 hammers, the inverted hammer and the normal hammer. So when I see that on H4, it automatically means that we're now looking at a potential reversal. And whenever it happens, as you can see at this point here, I still actually am holding trades from the 14th of February because I had noticed that.
Yo, just go for it. Go for it.
Guys, let's continue. Let's pop up the music.
I just want to whip still.
All right, so we can see from there that we've got a railroad track, and we've got the confirmation on the T. Stop it, man. Killing the vibe. So as Nick had mentioned that from that point we start to look at the ADR and multiply it by 3, and as you can see it says 353. By the way, guys, the ADR changes from week in and week out, sometimes every other week, depending on the volatility of the market for that week. So when there isn't a lot of movement, the ADR value will drop.
Question for you, sir, on that. The ADR, is that a 14-day ADR or something else?
I beg your pardon? Please, can you repeat that?
Sure. Is that a 14-day ADR or is it something else?
Are you asking what ADR means, or are you asking if it changes every day?
Well, no, it's an average daily range. Over what period of time? Is it 14 days?
Oh, it can be over 10 weeks, 20 weeks. It's the, to be quite honest, I don't know the template. What is the actual range? Is it 10
Okay.
or But what you need to pay attention to is that maybe, like you can see it's saying 118 currently on my broker.
Yeah.
Also, it will differ from broker to broker. So
Okay.
that's something you need to be very wary of. So on my broker, it's saying 118. I could come back next week. It could be lower. It could be higher. So that's something that you need to take into consideration. So remember, it's a range. It's a mean value. So it's an average. Don't feel like, okay, it should be 120. Just have an idea, right?
No,
Okay,
sure, but it's an average of how many days?
it's not over days, it's over weeks.
Okay, so it's an average. Well, I mean, it forms every day, right? Like today is 118. So that's an average of 118 pips over how many days?
I keep telling you, it's not over days, it's like over weeks, like a week period. It could be 10 weeks or more.
Okay, but you're not sure though, is that right?
I beg your pardon?
You're not sure how many weeks?
You keep breaking up. I'm struggling to hear you.
Oh, pardon me. I said, do you know how many weeks?
I said it could be between 10 and 12 weeks.
Okay. Okay, very good. Thank you.
All right. So, as Nick had mentioned, that then from there you just basically box up your ATR values. And you just drag them along. And you'll see more or less when you get, when you get to 3 times ATR, the behavior will change. And we notice here that they spiked to the low. This is now an H4. So the behavior is a bit different than H4. It's not like on the lower time frames. So you need to be aware of that. And also something that Nick didn't emphasize on is that this, who's that? Okay, so basically the 800, the 200, and the 50 EMA, the 800 and 200 EMA are basically like your moving support and resistance, right? And your 50 EMA is your trend EMA. So basically, if you see the 50 EMA curving to the upside, you should be expecting upward movement. You see it curving to the downside, you should be expecting downward movement.
Okay.
Then from this is your first support, this is your second support. The higher the time frame, the stronger it is. So as you can see on H4, they broke the support, came back to retest it, and went down, stopped right on the 800, went back, came, and couldn't go any lower. So they held, it broke it, and retested to go long, and boom.
Okay, great. Question for you about the EMAs, if I could.
Sorry, can you type that out? Because you're breaking.
Okay, can you hear me?
Okay, try again.
Sorry, yes. So what I've found is that once I lock in the peak formation high, for example, and I'm trading short, right?
Yeah.
On a 15-minute chart, I find that if I can identify a signal at a rotation back to the 200 on the 15-minute chart, that tends to be a very good signal. Would you agree?
Okay, I'm gonna just drop down to the M15 so that you can show me an example of what you're saying.
Sure.
Is it
Which one is what color is the 200 EMA, sir?
the blueberry is the 800 EMA? It's this one.
No, the 200.
The 200. Are you asking for the 200?
Yes.
It's the white one.
It's the white one. Okay. So, right. So if you see there on April 5th, right, price came up to the Mayo, the 200, and bounced off of that, so to speak.
Yes.
So I found that rotation, after the peak formation high has been set, as it was here on the 3rd and 4th, a rotation back to the 200 EMA, if a signal forms there, that tends to be a very good signal for me. That's what I've been trading to date.
Yes, you see that is what, see, this here is what you would call a straightaway trade, where the stop hunt is not above the Asian range, and it occurs on an EMA. As you can see, this area here is that there, and once this cross happens, that is confirmation that the price is going down. And as you can see, the 50 EMA is showing that price is going down because it's above. When the 50 EMA is above the candles, it means you're in a down movement. When the 50 EMA is below the candles, it means you're in an uptrend.
Now, you just mentioned a cross there. Those are the cross between two EMAs.
You're kind of breaking. Can you try that again?
Sorry. Yes, you just mentioned a cross. That's the cross of what? Of which two EMAs?
These three.
Yeah, which two are they?
It's these three. It's the 5, the 13, and the 50.
50. Okay. So it's really the 13 and the 50 that are key, correct?
You could say that. You could,
Okay,
to a certain extent, because the 13 actually follows the 5. They do the same job.
sure.
It's
It's more of a confirmation if the 13 crosses the 50, correct?
Correct.
Yeah. Okay. So when I have a swing, when price makes a lower high to the 200, and then begins to fall, and then the 13 crosses the 50, that would be strong confirmation that we're going to continue short, correct?
Yes, it will.
Okay.
And also, you'll notice that this is actually a big M,
Sure.
and that's an A.
Yeah, no, that's the peak, right? But on the 3rd and 4th.
Yeah, let me just go to a higher time frame.
Okay.
Okay, so looking at H1, we noticed that this was the peak for the drop, and it surely must have exceeded the 3 times ADR. $209. Nope, it didn't. So we still could get some down movement. But my thing is that this low, this W, see how it's a clear W.
Okay.
It's railroad tracks happening at the stop hunt zone, and you'll notice that there's a big W right there on the market baseline. You've got that. Price comes back to test the low. So basically, this low that was made by that candle becomes that, forms the low. And if you got in here and you didn't get out, your entry would have been tested again. But notice how, remember I said that the 200 and the 800 work as moving support and resistance.
Sure.
If moving upwards, you'll notice if it hits this, it'll work as a resistance, a moving resistance. Notice how price hits here, rejects, goes down, bounces off the 50 EMA, goes back up and rejects on the 200. And on that 200, we get a star pattern, which is essentially an M, and you've got that right there and there. You get the drop.
Good.
So these are the trades where you'll see me, I'm in a buy here, then I'm in a sell here. Then you come back again, I'm now in a buy from here, still having this here. These are gone. I've closed these. I've accepted, I've TP'd and accepted that the move is long. So,
Okay, so now you've switched to a 1-hour chart. So in the event of a downtrend, I would be looking for price to bounce off of the 50 to go short again. Would you agree?
Look, I would suggest you have your chart on the 1 hour time frame.
Yeah.
Then when you start to see potential moves, like when you see this candle spike to the low, and as you see it pull back like that, you'll notice, remember the TDI is not fooled by spikes because it works on closed candles.
Right.
And once this candle closes, you drop down to M15, or even while it's doing that, you could possibly come to M15. Did I lose it? There. So you come to the M15 time frame and you'll notice a railroad track right at the stop hunt box. Fine, you'll need to be a bit careful because it's a Friday and you had the dealer have the Asian box overextended. He gave you this W here, which was working the previous low, this low, and we went long, but we took our profits here because remember, this works as moving resistance.
Right, the 200 EMA on the 15 chart.
Yes.
Okay, so
All right.
I'm
Wait,
very clear.
I was just doing something. I just so when you see this behavior, like you'll not see these wicks. This is the dealer grabbing contracts, people with buy stops and stuff like that.
Sure.
He's just grabbing them so that he can go low. And notice, if you see these kind of candles, railroad tracks, and you see them either at the stop hunt box or on an EMA, man, you need to start looking at the TDI, see where it's at. Those are nice intraday setups. You get anywhere between 30 to 50 pips, sometimes more. Like if you had taken this trade based on this would be the first leg, and this is the second leg. Okay, let me just clear that. This is the first leg, second leg, and you waited for the candle close even here. Notice how this candle gives you half retracement of this candle.
That's a good M on the 200 EMA, which almost always works.
So if you took that and you put your stop loss above either the first leg or this leg, you're looking at about 25 pips here, 38 pips there. Your first take profit is here, you get 33 pips. Second take profit is at the previous low, you get 65 pips. And your third take profit would be based on the pivot points, which I'll explain in another while. So you've gotten some nice pips out of this with minimal risk.
Sure. Now I understand that, and that's what I'm doing. I'll identify the peak, and then I'll trade away from the peak. I'll trade pullbacks to the 200 EMA on a 15-minute chart. So all that's super clear and super easy. A question for you though: I found that Nick is trading not just from value, but when price begins to rotate back to value as well. That seems to be a little bit tricky. Can you explain how that's done?
Okay, I didn't get all of that. You kept breaking. Can you start again? When price what?
Sure. Okay. So what I primarily do is I'll identify the peak formation high in this case, right?
Here's the peak formation high.
Yeah. Okay. So now I'm going to trade short and only short. So I'm going to trade rotation signals that have rotated back to the 200 EMA on a 15-minute chart.
On the 15-minute chart.
On a 15-minute chart, I'm going to look for signals form at the 200 EMA. Right?
Okay. Let me just zoom out a bit.
Sure. Thanks.
So here's we agree that this is the peak formation.
Okay. Well, it looks to me like it's spread out over the course of 4 days.
Yes. That. See, the more times the dealer tests a high, even better. I don't want to be taking a swing trade based off the high being made today and I'll go short today, because I'm just going to zoom that out. Because if you look at this, notice how you've got this star pattern and it's tested. This area is tested again the following day. So dealer went short, bounced off the 50, came back up to give you a clear trade. But notice how he's working this area.
Yeah, so the peak formation high here is dragged out over 5 days.
That's what you want. The longer he's in and around this area, the moment he moves, it's going to be a very aggressive move in
Sure.
1 day.
Sure, exactly. So what I've found is that if I can identify a double top on a 4-hour chart, that seems to prove out a peak formation in a stronger way. Would you agree?
Yes, that is correct. That's exactly what Nick was saying, that if you can spot the peak formations on the higher time frame, H4, H1, daily even, but remember, you require patience. See, I've even marked them there. See, remember what I said about this EMA? It's a moving support or resistance. So when you see that price here fails, don't worry. They can break it, they'll retest it, and then you're gonna get a nice setup. You go long. These are the types of trades where you just keep pressing the thing.
That's the 800. That's the 800 EMA. Is that correct?
Yes, this is the 800 EMA, and you'll notice that. See, this happens in Asian. They come back with this hammer to test. They even come back as much as the previous low here. So you could get entries around here with minimal drawdown.
Okay, so just to be clear, sir, Nick was mentioning that I could trade from the 800 EMA peak to peak on a 4-hour chart. Is that right?
Yes, that's correct. But look, you need to understand that right now, as it stands, the 800 EMA has been in the field of play for some time. From, let's see, going down from around the 27th of Feb. But if we're looking the other way, see here, now it was working as a resistance.
Sure, okay.
You see what I mean? So you need to be able to identify which trend you're in, and this is where the TDI comes into play. These indicators are here to help you, but you don't obviously just rely on them. Like, something that's very important is the price action, how these candles paint. If you get a railroad track star pattern at lows and you can see that you're getting this behavior around the TDI, W at the oversold, at the oversold, or M at the overbought, then you know you're about to go short and you're looking for swings.
Okay.
First TP, if you're swinging, would be 162 pips, 63 pips. Second would be here, around about 280, and your final would be around here, 340. And that would have been over what, a week and a half, 340 pips. So now when you go long, you've got nothing to hold, like to show you, okay, where will it stop? You use your previous highs as points of interest.
Sure.
So this previous high is like a peak formation where you started counting your ADR boxes, ADR times 3, which is why you got 353 here, and you'll see from there all the way there, see, you got close to it. Well, it's above it, but on another broker, it could have been 360 or something like that. So that is a good indication that you've reached your ADR times 3. And then opposite way, there you go. So
KRM.
Yeah.
Yeah, I have a question about, so the 800 EMA, you see when price is above it, it's bouncing off as a support. So you would use the previous peaks as a sort of resistance level too, or?
Exactly.
Okay.
But not just that, you're gonna have other confluences. You have the TDI showing you need the TDI to be doing this as well. Like,
Okay, so you don't just enter off the 800 EMA, like you wait for the TDI to show a shark fin or something?
sometimes it depends. It depends. Sometimes, you know, if you can handle the drawdown, because you know it's going to come, it's like they won't just break it. Even if they
Right.
break it, they'll come back to retest it, you know. So you could have even entered for a buy here when you saw this. They came back there, they extended it, and then they're going to come back to around this area. Because you can see there's a lot of accumulation here because that's where the EMAs are.
Okay.
But now, I just quickly want to, before, so, okay, we covered that, the candles, the EMAs, yeah. Yeah, we covered the peak formations, peak to peak. Okay, psychological support and resistance. Okay, let's have a look at that. So basically, the dealer will make a psychological support and resistance zone or area where he will trap or he will accumulate from. So if you just go on to your 1 hour, so after the first 8 candles of the new week, you would just do this. That. So basically, this area, oh, sorry. So basically, this area is what you would call your psychological support and resistance. And as you can see, what the dealer has done is he worked it here. So he set it at the beginning and there, then he went above it to give you an M. Notice how the drop stops right on there. And now you've got like a shoulder, the head, and the shoulder. Then he goes long. This is on H1, so that's confirmation that we're going up. You even have the inverse head and shoulder on the TDI. He goes long. Remember what I said? He starts, see? Notice where this behavior. So basically, the dealer went long. Now we're looking for longs. So he goes long, but then he starts holding price here at this area, and that's because it's overbought there on the TDI. And another trick, this is just a trick, just a trick. You see a cross like that, getting exclusive content, guys. See that cross there? Look what it's become. Guys, talk to me. Are you seeing this?
Yeah.
So this cross here becomes where price rejects, and you get a multi-day M to go short, and there you go. Notice how now price is holding right where it began, and it's basically this, guys. It's basically this. Literally, this whole week was this thing. We had accumulation like that. Dealer went high, made an M, went down, started accumulating, went long, and came back to end of the week where they started. So in the instance that we have is we had this, stops there, goes higher. Goes higher, does that, then moves again. So, like, guys, the dealer doesn't have a lot of things that they can do. They just make variations of what they can do. And it's because we're so stuck in, okay, I want to see them do this, and you forget that they can do other things. That's when you would miss out on nice opportunities, because you're still trapped on saying, I want to trade from here all the way to here, because that is how support and resistance traders or retail traders work. And we need to trade with what the market maker is showing us, or the dealer is showing us. So there's that. And then also, another important thing regarding the EMAs is that when the EMAs are close to each other, like this, you are going to get a ranging type of behavior. So you should expect choppiness, or funny moves, like 1 minute they're going up, 1 minute they're going down. What direction is it? It's only because all these EMAs are here together. And once you see that, sometimes I don't even trade that pair until I see them split apart. Because you'll be holding, even if you catch the peak, like if you caught the peak here, you'll be holding. They come back, they test you. Maybe your stop loss is here. Look, your stop might get hit. You enter again, got an M, holding. They're not breaking this low. See how this low is not being broken? All because of this. Come back a third time, so that's 3 times. Dealer hits the high 3 times. There you go. US reversal. Finally, I would have caught it here. Go short. Because these entries would have been taken out with my stop being and break even by that. So that's something to pay attention to. You see EMAs like this, I'd advise staying out, but we're all different. For scalpers, this is a great opportunity. You can get 20, 50 pips either direction 2 or 3 times a day. So let me just show you what I mean. So scalpers, look at this. So you get a railroad track right at the low. It breaks the EMAs. You've got the retest there. You'd enter there. Let's just see. Even if you had entered here, your drawdown would have been about 12 pips. You got 50 pips, 45 pips. Because you're going to trade from the high. That's basically when it does this, it'll trade from low to high or high to low. Low to high, high to low. Either the Asian low, this low, or the previous low, this low. So even if you had entered here, when you saw that star pattern around here, you definitely would have gotten 20, 30 pips.
So KRM?
Yes.
So when those 3 EMAs in the middle, when price breaks it and retests, you would enter then, or at the zone at the.
If you want to have minimal drawdown, you should wait for when they test either the previous low or the initial low. Like you'll notice if you had entered here, notice where they stop. It's right at the previous high. Do you see that? From there, they give you a railroad track. You go short, they stop at the previous low. And you'll notice this. You'll be seeing a lot of this on the TDI, a lot of it. Because they're being erratic. See, the EMAs are all close together. So you get, but the beauty of this is that if you're a scalper, all you need to look for is railroad tracks or star patterns. But they need to be at the right places. By the right places, I mean either the previous low or the initial low, previous high, initial high, previous high, or new high. Simple, guys. It's simple. But in order for you to do this, I always preach that you should look at a few pairs, because that way you actually know their behavior. Like, oh, if GU is doing this, he's going to do it for the next 2 to 3 days. I know when I see this on gold, I expect it for anywhere between 3 to 9 days. Get this type of behavior in a 100 to 200 pip range. And you can scalp that each and every day and make a lot of money. Looking at 30 to 50 pips, sometimes even getting the full ATR range. Like, for instance, if you go to gold yesterday, you'll notice that gold did a drop. Here's your star pattern at the previous low. What happens? Drop. First TP, then they exceeded it. Look at this. You get a railroad track. Even if you had entered here, boom, to the high. Either this high, this initial high, or the previous high. You still get your money. Still get your money. That's one pair. One pair traded multiple times in one day. And what I mean by they're holding the level, notice how gold has been here from the 28th of March. They've just been here. So now you'll notice that this EMA is working like a trend line sort of. Our price just bounces off of it, bounces off, bounces off, bounces off, bounces off. The moment they break this and move, they're going to do this. Stop around here.
Right. So when you see price consolidating like that in that range, you expect a breakout or a continuation down?
I expect, you see now that, see this low was made here. Oh, shit. Okay, sorry about that, guys. Accidentally pressed stop share. So notice this low that was made on the 28th of March. Look at this. So what the dealer does is just comes back, tests it. See, on price, it looks like they're still going to go low. But the TDI is saying, no, we're going long. We're going long. So you trade it and boom, it stops right there. Gives you a railroad track, comes back. They don't give you a second leg. It becomes half. Okay, let me just redo that. It becomes half a Batman to drop, and look where they stop. Look where they stop. So you basically are trading in something like, I'm gonna try to draw it as neatly as I can. So you basically, no, I'm just, that's not gonna work. Let me try it like this. So basically, looking at this, you'll see that the dealer is just working in a triangle. It's basically like a triangle. So now I'll notice that this triangle, they broke it to the low here, but he came right back up within 2 hours. He was right back up at this low. This low that they've, so now this was the new low, and then they broke it. This low has been holding. It held this, until they broke it here, but came back right up, came right back up there. And notice, even if you had entered here, you still would have made your pips if your first TP was there and next TP is there. They did the same thing today. Same thing today. Testing that low.
So that low right there, and you see the support from the two lows previously. Yeah, I would have taken that breakout and then
Oh,
caught
short.
like a little pips.
Yeah.
But for people that went and took the buy, they would have got stopped out, right?
No, like I was selling this, I sold, but I only had two partial. I had one here, and the other one was at this low here. Then they went lower, missed out on that. But when they painted this, I was looking at this candle alone, and I saw like it looks like an inverted hammer. So I went in without a stop loss because they could have possibly came back to test me, but I knew it's going up because of that. And
Okay.
my first ticket was there, second was there. I didn't get this one because I didn't want to stay in the trade for too long. This morning, I went in short, had pending orders around, I think here, went long. They missed my TP by a bit here, came down, hit my stops. I went in again. Then they hit my TP.
Okay.
It was a bit of manipulation, but notice how it stops right at the previous low. So these lows are important, and if we take into consideration the psychological support and resistance, you'll notice that price is basically working within it. And the moment we have a clear break of it, then we'll know either we're going long or short. But looking at the H4, I think I shared this on the free channel that this spike I got in long because I saw it happening close to the 800 EMA. And this spike did not break this low, which was my previous peak formation low. So as you can see, this here happens to coincide with this cross here. Missed it by just a smidge, but it gives you an idea where the dealer will go. So if he comes back up, we've got a lot of places to look for profits, or take profit points. So it could be this EMA, this zone, this zone, this zone. So now I'm just gonna go into pivot points. So basically pivot points work based on the, do you have any questions before I move to pivot points, guys? Okay. No questions.
I thought you say that I did a question before when we had the W pattern on the berry.
Oh yeah, for USD MXN.
Yeah, because sometimes I'm like only making trades with the trend. I wait for the W pattern outside the Asian box, looking for TDI confirmation. Like sometimes I had all the confirmations, and market makers just drop one more level. I don't know if you got some tricks for featuring that.
You said the 25th of March, right?
Sorry?
You were talking about this day on the 25th of March, right?
Yes, that one.
Yes. Okay. I covered this actually. Remember I said when the EMAs are all close together like this, you get this type of behavior.
Uh-huh.
Yeah. So when you see EMAs like this, ideally, I would stay out. I would stay out. If you're looking to trade, it should be, you need to identify the previous day or the previous high or the previous low. So if you notice that this is the previous high, this is the previous low, and you notice that price keeps bouncing off this 800 EMA. So there you've got that like quasi star pattern there, and you go long. But notice how they're not breaking your initial high.
Okay.
Which would have been your first take profit. Remember, you need to have take points because the dealer is not here for you to make money. He wants to make money from you. So you need to collect your profits. If you had set your take profit there at the initial high, it may have been hit. Okay, because this pair is a huge spread, they would have widened the spread on purpose so that your TP is not hit.
Okay.
Especially if you see, can you see how the EMAs are doing this? That's not the type of behavior you want. You want proper, so look, even here, look what they're doing. Once they start spreading and fanning apart, that's where you get the move. Look how it goes there, rejects off the 800, and then you get a proper setup. And it's basically a shoulder, a head, a shoulder. And you've got that right here. And look where it's happening. Look where it's happening.
Okay.
This is what I was discussing shortly, just a short while ago, regarding initial lows and previous lows. These are actually great points of entries, guys. Great points of entries, especially if they line up with the pivot point. Then you know you definitely I'm in it to win it. I know it's a lot to take in, guys, but the strategy actually requires you to do a lot of work, which is why I keep emphasizing fewer pairs. Fewer pairs means you're able to identify these things quicker.
I have if we are New York traders, we should be trading the majors and K crosses more than the others.
Yes, you should. Okay, let me quickly show you. So basically, what you need to be doing is, okay, what's this? 50 trade. Okay, next covered that. String away, covered that. Resets, covered that. So basically, what you need to be doing is you need to have a Forex time converter, and you just basically jot in your area. It'll convert the time for you and show you which markets are open at the time. Ideally, you want to be trading because there's more volume when these two are open, or when these two are open. If it's more than two, it's even better, where you get all of these open, get more volume. The more markets that are open, the more volume or volatility. So you put in that your area. Let's say you live in Chicago, you just put in Chicago, it'll say the time and date, and it'll show you which market is open, how long it's open for, and stuff like that. So basically, how this would work is you'd try to use or trade pairs that are operating at that time. So if, let's say, you are unable to trade the New York or the London session, but you're able to trade the Australia and the Asia session, like this, when they both open, because they open at the same time. I mean, they are the two markets that are usually open when we're sleeping. So you could trade AUD NZD. I mean, sorry, AUD JPY or NZD JPY, NZD JPY, or what's the other one? What's the other one, guys? Help me out. When these two are open, I think that's about it. NZD JPY and AUD JPY.
Yeah.
Yeah. So if you aren't able to trade during those other times, say you're working or your time zone doesn't allow, you could look for that. But remember, these two markets, they're not as volatile. They're not. So you'll notice that the pairs that I've mentioned regarding those sessions, they actually have the lowest ADRs. The lowest ADRs. I'll show you now. Okay, sure, Khozo. Just gonna quickly. What did we say? AUD JPY. Oh, there is AUD and ZT. So look at this. Look, 53 pips, guys. 53 pips. 53 pips. Meaning if you swing this, so this is H4, this was the swing, this was the peak formation low. So got this. That's almost 300 pips over, this is 1 week, 2 weeks for 300 pips, guys. 2 entire weeks for 300 pips. Let's look at another pair. Yeah. Okay, that one's slightly better. You've got 62. 62. So there's your real track there.
So I have other question, Carm. So as Nick said, it's better for looking for 3 ADR and maybe one more for extended ADR rather than looking for 3 areas of consolidations for looking for the levels?
Yes. Basically, personally, I want to catch a low, swing it, and then while I'm swinging, I want to look. So if I caught this low, what I'm basically looking for is more places where I can go long. More places I can go long. So I can have that basically compounding. And then sometimes on intraday, I look for those counter trend moves.
Okay, but when you are swinging, like, where do you take profits? Like in important big time frame resistance or something like that? Or you just wait for 2 levels and then you take profit or something like that?
I discussed this. Remember I said, if you catch this on H4,
yeah,
you look at TP here at the 50 EMA, at the 200 EMA, at the 800 EMA.
Okay.
Remember. Now, here's another thing. Pivot points, guys. Pivot points are basically support and resistance lines that are based off the previous day's candle. So what that means is this, okay, not necessarily just yesterday's, it will look at the biggest candle or the most significant candle. So you could have the pivot points based on this candle for the next 2 to 3 days, as this candle is still like bigger than all the other candles here. So that's basically how pivot points are done or work. So going to USDMXN, and pivot points actually work best on exotic pairs, you know. So you just insert your pivot point there.
So the pivot points don't work as well on majors, like I mean, like GGU or something like that.
They do. It's just that people are scared of trading exotics because of the large spread and the high volatility. So if you use the pivots, it'll even work better for you. For instance, if you notice this W here, notice how it occurs both on the previous low and on the pivot. Remember I said, if you see something happen on a pivot or close to a pivot that's by a previous low or high, you must just take it without fear or favor. Juan, here's that day that you were trading. Look, if you had gone short, you should have went out here. And if you had gone long, see, there was no area for you to go long. Not a pivot, but a previous low if you're on the M15. But looking at the higher time frame, you'll see that the TDI is shown that you should be looking for shorts.
Okay.
Not longs. And once this happens, there we start looking for longs. And notice how when they went long here from here, because it's not any point, it's just a point of interest from the previous low, they came back to retest not only the EMA but the pivot point, and they went long. So how these work, as Nick had explained earlier, is that they move from odd to odd, even to even. So if it starts on M5, it'll go to M3. Starts on M4, it'll go to M2. Starts on M2, it'll go to M0. Starts on M0 to M2, M2 to M4, like that. Do you understand, guys? Hello?
So the M's are the pivot points?
Yes, these lines are the pivot points. The M's describe the pivot point, that this is M4, M5, and so forth. And you'll notice that you had price start at M2, come to M4, come back to M2. Notice when they broke M2, how they came back to retest it in one candle. That.
Right.
So we can use pivot points as flip zones, like when they break through, we expect today the price come back and then retest the area for going then for the trend.
Basically, if you remember that market structure thing I showed you, where you've got the Asian session, the stop hunt, then the trend.
Yeah.
If you see this and it's less than 50 pips, as you can see, it says 490. That's actually 50 pips. Notice how. And also, exotics don't have like your conventional stop hunt box. As you can see, this is actually a stop hunt box. This one as well. Look at this. This is your first leg. There's your second leg. Right on an M4 pivot. And it drops all the way to the next pivot. From there, it retests. It retests the EMAs and the previous low. I mean high. Sorry, this high.
Okay.
So in case you had missed this, and when you see this, guys, when you see this cross of the 5, 13, and 50, it's a definite we're going short, or whichever direction it's in, it's definite. So when you see this, you miss it, don't worry. Price usually, if it's not a straightaway trade, of course, price usually comes back to test the 50. It's called the ID 50. ID 50. Intraday 50 bounce. Catch that. See, this is a railroad track happening not only on the 50 but as well as the previous high, and you go short. And when you go short here, you take profit. First take profit would be this center pivot, and this center pivot is basically like how can I put it? If price is coming down like this, it works as a major support. That's why it just doesn't break it. It tests, come back to retest M3, and they go short. And then from here, you get another ID50 to go short, another ID50, ID50. And you'll notice it's always with railroad tracks. There.
Can you show the railroad track again, please? I didn't see that.
Okay, this is a rail. This right here. This is a railroad track. This right here. This is a railroad track. This right here. This is a stop pattern and a morning stop. I mean, an evening stop, meaning you go short. Okay. This is a railroad track with an inverted hammer there. So there's another railroad track. Notice you'll see these things on the TDI. You'll either see a W or a V. So on intraday, this was W, V, V, M.
Okay.
I know, guys, we make it look simple, but it's years of experience. And our failures are what help us to learn more of these things.
Right.
Okay,
So,
is there any way to use correlations for the market maker strategy?
did you say correlation?
Yeah, between currencies. Do you use it for trading?
I don't trade correlation. I trade. Let me give you an example. So correlation would say USD ZAR is supposed to go up if gold is going down, right?
Yeah.
Because they're on opposite sides. Okay, let's have a look. Let's see something. Let's just see. Let's see this correlation. Let's just see. So gold should be going up, right? Because USD ZAR has been dropping, right? But has gold been going up? It's also been dropping. What's the day here? 25th of March. What's the day here? 28th of March. There's your correlation, buddy. Let's have a look at this. So you've got USD on this side and USD on the, okay, so USD is a quote here and USD is a base here. So meaning they should do the opposite, right?
Yeah.
I'm not seeing an opposite. Look at the days, guys. Look at the days. Do you see I've marked this? 27 March. Look at that. Right? 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 Look at this. Check this out. Check this out. They just did it the next day.
Wow.
To drop. Not. They did it the day before. On the 25th. Guys, don't be induced by these funny stuff and whatnot. Just look at what Nick and I have discussed. Go to the higher time frames, identify a peak. From there, just trade against it. Trade against the peak. You see the peak is here? Is here? Your goal is to go the opposite direction. If you see that the EMAs are too close together and are not separating, expect consolidation. Consolidation, choppiness, choppy behavior. These EMAs are moving support and resistance. 800, 200, 50 is your trend EMA. That's it, guys. That's it. And let's quickly look at this on gold. Drop to M50. Notice we've got the railroad track right on M2 and it stops on M1, which is actually they're working the initial high. The reason price is stopping here is because of this. These EMAs, guys.
So when say you're scalping, right? And you see you identify the low, the peak low. You want to wait till price comes up or comes back down to there and buy it.
Okay. So this is FX gone, right?
Yes.
Okay. For someone like for someone who's scalping, guys, if you see that the EMAs are doing this, just look for two things: star pattern or railroad track. It has to be working either an initial high or a pivot point. You don't even need to look at the TDI at this point because railroad tracks are reversal candles. That's literally what they are.
Yeah.
It's the dealer painting an N or a W fast. It's basically price going up, then price going down. So the direction of the railroad track will be the color of that candle, the last candle. So you can see this is a red candle, right? And a railroad track, it must start where the other one ends, right there. You've got a railroad track. So basically you have a shoulder, a head, a shoulder. And
Right.
that from the TBI, and you go short. Notice, remember what I said previously about the pivot, center pivot. Look how it's working as a major support in this instance. And that is why I was going long. I was going long, looking to TP here. First TPs was here, second TPs was here, third TPs was here. So the trades that were left open looking for third TP, they hit my stops because my stops were 10 pips below this low. They were around here. Took me out with these. So I went back in to get back the money I lost, this money, from here to here, just to cover it up. Literally, guys, you could spend the whole day, especially a scalper. When you see the market is like this, when you see the EMAs are like this, you could literally spend the whole day looking at one chart and you're gonna bag.
Right.
Look at this. Look at this. We've got a railroad track here and it's working that previous high. You see that?
Mm-hmm.
Railroad track, you go short, there's your first TP at that center pivot, at that pivot. The next TP is here. You even have a point of re-entry here. You've got an intraday 50 bounce with a railroad track. And it would be, see here, I'm just going to zoom it in so you can see it better. This is an M. So that's about it, guys. If you've got other questions, this is your chance.
Yeah, the pivot indicators, do you mind sending them in the chat?
No problem.
Okay, thanks.
This is actually a program. So I'll send the program in there. You just install it.
Okay. Thank you very much, man.
Yeah, awesome. All right, thanks, GP. Perfect. All right, guys. So we've been 2 hours is already up. Well, we went well beyond 2 hours now. Yeah, I'll send this recording into the group, and then you guys will have, I guess, until Sunday to kind of download that recording, and then this group will be deleted. So make sure you download the webinar, keep it somewhere safe. Please don't share it. You know, we're trusting you guys. Don't share it. Don't do any of that stuff. It's only for you guys to look at. And yeah, feel free to ask. We'll answer some questions until Sunday. So if you have questions, we can send some indicators in the group or whatever. But come next trading week, the group will be deleted. So then, you know, all content will be deleted from there.
All right, thank you.
All right. Perfect. All right, guys. All right, thank you. And we'll answer any questions in the group. But enjoy your weekend.
You too, man.